about 4%. But we have both managements with us. First, let's invite Punit Makharia, the Chairman and Managing Director of Shree Pushkar Chemicals and Fertilizers. Punit, hi, good morning. Now that your stock has listed, you'll be, you'll have a little more liberty to give us some numbers going ahead. In FY15, your profits were about 10.5 crores and revenues were about 200 crores. What kind of growth do you expect to see in FY16?
Very honestly speaking, if you see, this earlier growth of the company starting from 2011, this company was around the 130 crores of the top line and around, this 2 crores of the bottom line. In the year 2015, we have crossed 270 crores of this top line, and the profits have gone almost by, the 9 times, close to 18.70 crore rupees PAT basis. We definitely promise to our investors, and we would like to thank our investors to have a faith in our company that they have kept. In spite of such a heavy crash that was on this Black Monday, the issue has sailed out very successfully with this oversubscription amount also the company received. We also believe, and we have a commitment towards the, all the investors of the company, that the company will have a same kind of a track record in future achievements also.
Okay. Punit, you've pledged about 35 lakh shares with IFCI. Why is that?
Basically, this pledge was done in the year 2009. Initially when we took the first growth capital from IFCI Venture Limited, at that time, since it was a share subscription, this was the terms of the share subscription agreement. Okay. And thereafter, since we have already done the IPO, as of now, the entire pledge except 3 lakh shares has been made totally free. And as told by IFCI, that immediately after listing, the balance 3 lakh shares would be also freed.
Oh, I see. What is the company's...
this pledge is not going to have any effect on the company.
Fair point. What is the total debt of the company?
There is no long-term debts on the company as of now. It's totally, this debt-free company. As far as the working capital are concerned, company is hardly using any of the working capital facilities. Though the lead bankers have sanctioned, this total limits of 82 crore rupees, but the company is not utilizing more than 8 to 10 crores. That too also these non-funded limits. Practically, it's a completely debt-free company.
Okay. Can you just give us an indication of what exactly are the raw materials that you use? You are in the business of manufacturing dyes as well. Have you seen any fall in raw material prices, and going ahead, will you be able to do better than your margins of around, I think, 30% that you're sitting on?
Practically speaking, the kind of business model this company has conceived, it has gone into the deep root backward integration. Most of the raw materials what company is buying is self-manufactured, this into the company. Since this company has got a zero waste policy into them, so whatever the waste is generated from one particular plant is used by another plant. So practically speaking, if you look about the these raw materials, there is no much impact. This entire market of the raw material is very stabilized. Looking at this oil industry, there is no impact of this oil pricing file.
But despite backward integration and despite using all the raw materials from your own end, you haven't been able to really grow your margins much. I mean, in FY14 it was 13%, in FY15 it was 13.9%. Why don't you have an operating leverage?
Now, since we'll be going into the forward integration, that this entire raw material chain is manufactured by us. Now we'll be going for the forward integration. That would be additional value addition for us. We are sure, and we are sure that we'll be achieving better EBITDA margins than earlier achievements.
Okay, so you could go to what, 14, 15? Any guidance on margins?
Very clearly speaking, we have achieved almost 13.9 to 14% in the earlier years.
Yes.
And this would be definitely very, this good growth. Approximately 20% growth should be there.
So how much have you raised through this IPO, and how much of that money will be put into forward integration, into the investments into forward integration?
Total IPO has been raised as a 70 crores, and before 70 crores there was a pre-IPO placement of 5 crores also. So total fundraising program was of 75 crores. Out of 75 crores, 13 crores is going to IFCI Venture as a OFS to them. Balance 62 crore rupees would be entirely going as a capex for going into the forward integration as well as into the backward integration. One more thing I would like to bring to the knowledge of through this is the panel is that we have yesterday we have entered into selling arrangement with the largest company of the world, called Huntsman Limited. Huntsman Limited Textile Effects. They are the largest company in our sector for this marketing of textile dyes, and we have entered into this long-term the selling agreement with them.
Okay.
So this is a matter of a very great proud for the company.
All right. We'll leave it at that, Punit. Thank you very much for joining us with all those details. Okay, let's welcome Aditya Rao, the Vice Chairman of Pennar Engineered, now into the conversation. Aditya, good morning. Can you give us an idea whether any of the amount that you raised, that 156 crore you raised, comes to the company, or is entirely your PEs divesting?
Out of the 156 crores that we have raised, about 158 crores actually, and about 100 crores is secondary, as you said. So the PE private equity player that we have, Zephyr Peacock, is doing a part exit. 58 crores flows into the company.
Okay, and what
equity expansion?
What will it be used for?
The use of funds has been defined as investments into working capital, general corporate purposes, and about 10 crores is going to go into growing our engineering services business, which is a little nascent, but it's a high beta, high scale business, and we are very confident that this money will be very well spent, the 10 crores part, to ensure that we bring in further scalability in that business vertical.
Okay. Aditya, morning. Why are your numbers so lumpy? I mean, in FY15, your net profits were about 22 crores, but only 4 crores was earned in the first 8 months, and then the rest, in the last 4 months of the fiscal. Any reason for that, and do you expect this lumpiness to continue?
What you saw there, the 4 crores and the remaining profit coming in the last 4 months, is a little bit of an aberration. It had to do more with us going for an IPO, audit periods, closures, revenue recognition. A fair analysis would indicate that we make half of our profit over the course of the first, let's say, about 8 to 8.5 months. And the remaining period gives us the other half of our profit. So yes, there's lumpiness to an extent, but not to the extent that you saw last year.
Okay, your outstanding debt, indebted amount has risen by 87% year on year to 127 crores. But your sales rose only 22%. Isn't that an outsized rise in outstanding debts?
As of right now, if you mean outstanding debts, if you would define that as an accounts payable number, these are temporary aberrations. You look at a balance sheet number, the temporary aberrations in our working capital. It has more to do with the revenue we pushed out in March. March was a very large month for us. So typically accounts receivable and accounts payable both shoot up. Okay. If you're talking about long-term debt, we are a completely debt-free company. We have no long-term debt. Okay. And even our working capital usage has been in line with our historical usage parameters.
Can you give us some visibility on order book? Currently, I understand your order book stands at about 346 crores. But what are the orders that you can expect going ahead? Any orders that you're L1 in? What kind of visibility can you give us?
Now that we are listed, we are at liberty to say a lot more than we could have over the past few months. Our order book currently, as it stands right now, is 450 crores, not 350. Okay. But obviously, we couldn't give you that number until we were listed and we have started life as a listed entity. But the vast majority of that will be executed in this financial year.
Okay. Can you explain your product to us? Didn't quite understand. Pre-engineered steel building systems, solar module mounting structures, and cold form structures. What do these go into? Into factories? Into what?
These are essentially, we make industrial buildings, commercial buildings. We make engineered building systems which can be used for a wide variety of end users. Those can be warehouses, factories, airports, aircraft hangars, high-rise buildings. It's a very versatile construction concept, and it is the manner in which buildings are made in the West, in the US, in China. Okay. In India, we've been for far too long a country that's been in love with concrete, and that's changing. Over the last 7 years, we've seen a massive expansion in the growth rate in this sector. Okay. So we make engineered building systems, a more modern construction technology.
Okay. EBITDA margins are 11%. Can they improve?
We absolutely can. We believe there's tremendous operating leverage that's possible. More importantly, every bit of revenue, additional revenue that's coming into the company is coming in 3 ways. It's coming in at a 20% gross margin or an operating margin for our core PEB business, and our engineering services business adds revenue at 70% EBITDA. A lot of this couldn't be shared before the listing, of course, but we are very bullish on margin expansion, and you will continue to see margin expansion in this business over the next few quarters and years.
All right.